Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Thursday, the 6th of September, 2007. The markets are closed now, and the spiders finished with a gain of 40 cents, or about 1/4%. It was a pretty quiet day today overall. Yesterday I thought that maybe we're going to be slightly down to consolidate, and it's good to see that the 10-day moving average is maybe starting to reveal itself as a place where this market is finding some buyers. So we'll continue to keep an eye on that. The 10 is above that 20 as well. But it was also, you got rejected on the upside at the 50-day moving average. Also bullishly, though, was the fact that we do remain above the neckline from this inverted head and shoulders pattern that we've been watching. And true to kind of what it looked like in 2006, this market could consolidate bullishly above this next neckline for the next couple weeks, and that would help to turn the 50-day moving average higher and perhaps create a solid base for this market to rally higher from. I still believe that this is going to be our most important low for the next couple of weeks, right down near that 143.80 or so. And I'm hoping that we can see this area near about 146.75 or so start to be the next higher low, since we do have this higher high in place. So let's take a look at the intraday time frame. Yesterday we saw that the market came down to its rising 5-day moving average and tested that yesterday. Tested it once again this morning, and then moved past the what had been intraday resistance yesterday near that 148 level. And if you recall, yesterday I said that I thought the 148 level might signal the beginning of a recovery for this market. So right now we're going to have to look at important support is about 146.95, and below that, of course, this 143.50 or so. It looks like the buyers are gaining back control, but again, with the daily time frame showing as mixed a picture as it is, it tells us that we might potentially be turning in here, and bottoms and tops are a process, not an event. So that this could be could be the signs that we're looking for, that process is taking shape. The markets are at a critical juncture here, so you can't make big bets in either direction when it comes to looking at the trends here for the S&P 500. Intermediate term, again, we've got that rising 5-day moving average, and that is an encouraging sign, so we'll continue to monitor that. These semiconductors did finish with a good gain here of about 0.9%. They were up 34%. Looks like that 50-day moving average may be acting as support in here, so that's a good sign. And you can see again that this market did break its neckline and had suggested a conservative target up near about 39.5. So the picture is improving in here. It's consolidating on lighter volume than what we had seen on the rally last week and on Tuesday of this week. So it's good to see that the volume is coming in on the upside in the semiconductors, and the corrections occur on lighter volume in here relative to that advance. Looking at a 30-minute time frame, you can see that now it looks like about 38.10 or so is going to be an important level of support. I think breaking below 38.10, then we might have a deeper sell-off that maybe brings us down towards that 37.50 level. 37.30, if we recall, was an important number previously. That might be about where that this trend line is met. I'm not calling for that because I think this action looks pretty bullish on the intermediate term time frame. But it's just something to be aware of if the sellers do regain control of the short-term trend. Very similar to what we saw in the SPY. The highs, or the area of resistance yesterday, was taken out early on, and that level held as support. So nice little pattern of higher high and higher low in here, with resistance acting as support on a pullback. That's the type of action you'll like to see if you're bullish. If you're bearish, then maybe it's time to reconsider your short-term bets against the semiconductors, because again, we've got a rising 5-day moving average in there, and that is typically been very bullish for the market. The IWM is still kind of just a real mess in here. Obviously, we're going to continue to look at 80.30 to 80.50, even up towards that level. That's where the resistance has been and continues to be. We saw even this week. We do have higher lows in here. The most important low is going to be 76.30, 76.40 or so. But then we've got this morning's lows, and let's just call them conservatively $78.20. Breaking below 78.20 would be a reason to get defensive. We do have a rising 5-day moving average, and this market is kind of a little bit It tried to break with the spiders and the semiconductors midday, but it failed to hold up in there. So that's one slight warning sign, something to be aware of. But I think as long as we can hold above 78.20 for now, then we've got to look at that as pretty bullish action. Yesterday I'd said 78.35. So 78.35 is really down to 78.20 now that we've seen the market trade down to that level here today. That'll be important as far as if it breaks below that tomorrow, then we're going to have to get very defensive once again in regards to the Russell 2000. The NASDAQ 100 continues to be the most bullish. These guys broke past that neckline last week when the rest of the markets were kind of stuck underneath it. Still looking at the measured move objective, based on a conservative target up above 51 or so. And you can see today that we had lighter volume than we did yesterday. The market is holding on to these gains very, very well. And it's holding not only above that neckline, but above this prior level of resistance over in here. And this was an important level when the market just began to break down. So now that it's back above there and holding above there, it's starting to look a lot more bullish in here. I still wouldn't be surprised to see a pullback, maybe down towards that 50-day moving average. If it were to occur on an open, I would look for evidence of a reason to buy with a pretty tight stop, because overall I think the action in the Nasdaq 100 is much more bullish than the rest of the market. This high from today, this high area from today, about 49.35, looks pretty important going forward. We do have higher lows coming up to that level, so perhaps we're building for a move above 49.35 and this market continues higher. Odds would favor that with a rising 5-day moving average.